Welcome, everybody. According to the official timekeeping system of the United States of America, my Verizon cell phone, my Apple 15, not paid off. It's exactly 2 o'clock Eastern time. And if you're attending this open forum in another time zone, it's probably a little bit earlier there. Thanks so much for joining us today. I'm your co-host, Mark Heiner, joined by my partner, Jim Blair. This open forum is brought to you by the National Social Security Advisor Certificate Program. After Dave training, advisors take a really simple assessment, fair but challenging. After passing it, they join 2,800 advisors across the country that have earned those certificates so far. So let's get things going here. By the way, Jim and I had a good event earlier today. We held a Social Security discussion type of event, propaganda stuff to tell advisors what we do. So we had it at a local restaurant called not local, it's nationwide, called the Original Pancake House. I'm sure you have them all across the country. And there were about 15 people that attended. And the purpose was to talk about Social Security, talk about who we are. That's the main purpose, was to promote our company. And Jim, I thought it was a success. Do you?
Yeah, I think everybody had a lot of questions and seemed interested.
Yeah, I'm glad. We're going to have more. We're thinking about maybe going to Louisville the next time, have a little session there. Okay, it's May 13th, 2024. So you know exactly how this works. Raise your hand and we'll get to you right away. But before anyone raises their hands, no one has done that yet. I'm going to go right to our good Pittsburgh Pirates and Pittsburgh Steelers fanatic, Teresa Hutchinson. You indicated that you sent us an email sometime, and we came up with an answer you thought was the right one or agreed with you. So please go ahead and explain the situation, please.
So I got an email from a client, and the gentleman has a PIA of $3,600 odd at his full retirement age. His wife is not eligible as she is an Ohio State or public school teacher, so she has a pension from there. And her pension at age 65 is going to be about $400 a month. And the pension is made up of her contribution, investment growth, and then the Ohio teacher contribution portion. And what she wants to do is forfeit the employee portion or the Ohio State teacher portion of that, roll over the employee part into an IRA, so she doesn't have to do the government pension offset. And I thought, well, a pension is a pension. It doesn't matter if you're rolling it over into an IRA or not. But because part of it is employer and part of it's employee, I sent you and Jim the email, and Jim came back and responded that government pension offset still applies if she rolls it into an IRA.
But Jim, and I agree with that answer completely, 1,000%. But Jim, isn't though some of the question though is if she rolls over her contributions and any income earned on it and forgoes the employer portion, then WEP or GPO might not apply? Jim, explain that, please. I guess I'm a little confused.
Yeah, what you have to do in that situation, you just withdraw your contributions from the plan. Now, that can include interest, but it cannot include any money from the employer. So you work under it for 4 years, you're not eligible for a pension, you draw out your money, that's fine. You're not subject to WEP or GPO. If you simply just in lieu of a pension, so you're not giving up completely any rights to a pension, you're just doing it differently, you're rolling it over into an IRA or 401k or something, then it's still going to apply.
But Teresa, in your question though, wasn't the employer portion going to be
The
ignored
employer
or?
portion was going to be rolled into an IRA.
Oh, the employer portion
Yeah.
was going to be.
Or the
oh,
employee, I mean, the employee portion, so that part would not affect GPO. Once they took what they contributed to, even though they never paid Social Security on that portion.
Right, it's if they only draw their own money out and give up all rights to everything, no monthly payment, no insurance, nothing. It's just you give up all rights, then it doesn't apply.
I just couldn't figure out their rationale because at $400 a month, she's only giving up 200 and some
Oh.
odd dollars
true.
Yeah,
to GPO.
Well-
What's the difference?
Yeah.
It didn't make
good
sense
point,
to me
yeah.
why they wanted to do it, but that's what they wanted to do.
Okay. So then
yeah,
Jim and I are both right. He's more right, like always. Okay. Teresa, did I confuse the issue at all?
No,
Okay. Okay. So I'm going to go around the room, say what we do. Pam, you're first up. Well, you're second up.
Second up, hey, this is the first time I have joined one of these and I'm just trying to keep more up to speed on all the things that you offer. So what am I supposed to be asking here?
Well, the purpose of our open forums is for advisors to ask us any Social Security related questions. They're twofold. Number one, to ask us questions so you control the content, but also number two, for advisors to listen in on the questions and answers from other advisors also.
Perfect. That's probably the stance I'll take today, only after being certified with you for, I think it was in 2021.
Uh-huh.
I'm finding that I'm constantly learning, and every single case that comes in has just a little bit different tweak to it. And I think the one thing that I'm finally starting to understand after all this time is the survivor and the spousal benefit, or of the big difference between those. So
Mhm.
I'm just going to listen to the other things that the people asked today, and if I can get a specific question brought back to my head, I'll pipe in.
Okay, and maybe towards the end we'll talk more about spousal benefits and surviving spouse benefits. How does that sound, Pam?
Perfect. Appreciate
you.
it. Thank you.
Okay. All right, Alicia. Hi, Alicia.
Hi. I mostly just had a clarification because I get these mixed up and don't quite know how the rules work. So, and I've had several of my clients ask this recently, but with benefits, so we know that 70 is the latest to recommend claiming your benefits because after that, there's no delayed retirement credits, those stop. But they've been wondering if there's any benefit to continuing to work after age 70, because a lot of our clients are the type who they want to work as long as they can. And my understanding was that because they're still working and paying into Social Security, it can continue to increase their benefit amount. Is that correct?
Alicia, you are correct. What you need to
Okay.
remember is that earnings from previous years, from 0 to age 59, are indexed for inflation. So if your client at age 70 is making $100,000, that needs to exceed the lowest year of indexed earnings used in the calculation. And if it
Okay.
does, benefits may go up $1 or $2 or $3. If not, then your client wasted those FICA taxes.
Okay, thank you.
Okay, Jim, would you add something?
no, that's right. It might increase the benefits. They will recalculate it to see.
Mm-hmm.
They do that every year. It's usually around October when that happens. And if there's an increase, then they'll see a benefit deposited in their account, because technically it's effective with January, but it's October before they get around to doing it. And then their check in November is a higher benefit. Usually doesn't increase it a whole lot because, as Mark said, you're comparing it against indexed earnings, but it could. I mean, if you're 90 years old and still working, it could have an effect. So they will
Jim.
do that as long as earnings show up.
The way things are going, Jim, when you're 90 years old, you'll still be working.
It's looking that way.
Yeah, I had a question today, an email from an advisor. He said that husband and wife sent him an email, or her, don't know for sure which one, indicating what their benefits were at like age 70 and a half. Yeah, indicating what the benefits were at maybe 70 and a half and 70 and 3 months. And his question to me was, he thought, benefits would not go up past age 70. So I said that's true for DRCs, but I said COLA will continue all the time. I don't know exactly what his question was, but I just wanted to make sure he or she knew that benefits past age 70 may very well go up, just not for DRCs. Jim, did you read the question the same way?
I'm
Do you
trying to
remember
recall
seeing it?
that one.
You may not have. I replied.
Oh, okay. I might not have seen that one.
Okay, that's fine. Okay. Let's go to Lynn. Hi, Lynn.
Hi, Mark. How are you
Hello.
today?
We're good. Thanks for being here.
Good. I'm just here listening again.
Okay. We like people that listen. We also like people that ask questions, so it goes both ways. Okay. Dan, you're on. You're up.
Hi, how are you?
We're good.
So I did a successful presentation to my agency the other day,
Okay.
a seminar over a Zoom train. And so one of the reps got in touch with me later in the day with a fairly complicated situation, people that he was working with. So I need like help of a CPA or somebody who knows taxes and how it impacts, because like the short of it is, one of the guys, one of the married couple, he wants to take his benefit early, so before his full retirement age. So he wants to continue working. So there's going to be earnings test. And so they sent me that information, but it's, the question of whether it really makes sense based on, what, how much he'll lose in benefits and how it might impact tax, trying to combine everything together with what, what would really help to claim early, or just wait, for the full retirement age and then not have to worry about that. So I was wondering if anybody could kind of help me sort through that. Trying to give
Dan,
this
are you
guy
asking about taxes or asking about the annual earnings test, or both?
both. I mean,
Okay.
it's, yeah. So
Okay.
he also has apparently some kind of pension from the Navy. Is that possible that the Navy is providing him with some money?
Well,
So it's
yeah.
a kind of a complicated,
Okay.
situation there, and with all those factors, and it's beyond my understanding
Yeah.
of how to actually calculate.
Well,
give,
does your client have a tax preparer?
I think so. Have them do it. I mean, but I'm not.
Well, yeah, I don't think you should,
Yeah.
you should analyze taxes. So maybe there's some software out there that will do the tax calculation for you, but clients should reach out to a tax preparer. And of course, we can always assist when it comes to the earnings test. That's for sure. How much is your client's earnings?
I think all told, it's about 55,000.
And what age again?
Like early 60s.
Okay, over 62, no doubt. So 22, 55 minus 22 is 33. Lose about 15 to 16,000 in benefits, it seems like.
He would lose.
Yes, lose. Yeah, just the earnings test is 22,320, and
320.
you lose $1 for every $2 over that amount.
Right. All right. So yeah, it sounds like it's not worth it at this point for him to deal with that.
Probably, maybe it's just
Have
better.
him check with his tax professional.
Well, for the tax one, but not for the earnings test.
Yeah.
Right,
Okay.
but as a tax professional.
Oh, fair. Okay.
Please
Oh.
check with your tax professional, because like his Navy, and depending upon what state he's in, and depending upon what type of retirement is, it may not be taxable, so it may not be considered. And then, is he married? Is he single?
Married.
yeah, you've got a lot of variables and it really needs a tax professional to look at it.
Right, right.
Please.
Yeah, no, for sure. No, I wouldn't want to, start giving advice where I'm not licensed or, obviously that's not,
Yeah, I never give tax advice anymore. Never
Mhm.
do.
right, right.
Thanks, Lynn. Appreciate your comments. Dan, anything else we can help you with on that situation?
Not with that, it's funny. I have to write down questions because they're like in between these sessions, something will occur to me.
Yeah,
And then I don't write it down. And so
Yeah.
then here I am and I'm thinking, what was that question that was keeping me up the other night? And
yeah.
yeah. So I'll remember to write it down somewhere. Then I have to remember where I wrote it, but that's another problem.
Okay, Dan, thank you. I get it.
All right.
Believe me, I get it.
All right.
Okay, but go to Marcia. Hi, Marcia. Good morning to you.
Hello, hello.
Hello.
I'm happy to be back and happy to see all of you folks. I do have questions. I'm getting I would say an inordinate number of people asking me about various disability rules. And I don't really, play a whole lot in this sandbox. But are there general rules around disabled? And it tends to be not about that individual being disabled. It's about their adult disabled children.
Oh,
And so it's parents entering Social Security, and they send notes that say things like, hey, I've heard that once I claim Social Security, my adult child with disabilities, and they know some of the rules, like before age 22, or they'll tell me since birth, they had a disability. It's like, what happens now to the adult child's benefits? And I think right out of the top of my head, I bet Jim Blair would know that.
Well, if they're the child's receiving SSI, supplemental security income, when the parent files for Social Security benefits, they will be required to file for the disabled adult child benefit. And depends on how much it is, what the parent's PIA is and what the child ends up with. You may end up with receiving both SSI and Social Security disability. Basically, the amount's going to be the same plus about $20. But it's still a combination of the two. If it's a higher amount, if the parent was a higher earner, they may lose the SSI. The area I'm not real familiar with is with the Medicaid, because if you're on SSI, you have Medicaid. When you're on Social Security disability, even the children, after 2 years, you're eligible for Medicare. Generally, and it may depend on the amount, and I don't know, someone may know a little better on this than me, but I believe if they're on Medicaid, it can continue. But I always tell them to check with their caseworker, just to be sure.
Yeah, and any other helpful hints with disability questions? Because just to send them to an attorney is not always the most helpful thing, though that's what I do.
Yeah.
Because I can't find an attorney who has expertise in Social Security.
Well, if they're already receiving disability benefit, it usually isn't an issue.
Okay.
But if they're not receiving and the parent's just now filing and they say, yes, I have a disabled adult child, then they'll fill out a medical report, give the names of the doctors, hospitals, clinics they've been to, sign some medical releases, and Social Security will then make a disability determination. It's just a time-consuming thing.
Okay.
But just make sure you list them. It is on the application. Do you have any children under the age of 18? But it also asks, do you have any children between 18 and 19 still in high school or secondary school? And do you have any children who became disabled before the age of 22? And if you say yes, they'll ask for that child's name. That protects them because they're listed on the application. So then they'll need to file an application for that child.
Okay. Thank you.
Sure.
Thanks, Marcia. Bruce, you're next. Bruce, you're kind of in the dark there.
I am. I certainly am. I got to fix my lights. But
Okay.
Mark, I appreciate the time. Jim, I appreciate my time. I I guess mine isn't really Social Security related at all, but I took the IRMA certification and I was looking to do any marketing with these people at all. I was looking at their software. I was looking at doing a marketing program with there. I was wondering if anybody out there has done anything with them as of yet who did pass IRMA and what I guess what their experiences have been.
I know, Bruce, several of our advisors have taken the IRMA Certified Planner class and become certified through them. Anyone on this open forum that has done that?
I completed the IRMA class, but I haven't moved forward and got the certification, but I haven't moved forward with their software.
Okay, thanks, Michael.
I
Appreciate it.
completed the certification this week, but I haven't moved forward with their software yet either.
Okay, it's fine. Okay. I would have to think 25 of our advisors have requested information on the IRMA folks since I had them on a webinar not long ago. Okay. So Bruce, I don't know if we really, and if you want to send me an email, Bruce, I can, I do know the owners there, so I can.
Yeah,
get
that
you-
I do. That I understand, Mark.
Yeah.
But they're trying to sell me on a marketing program, which I was ready to commit, and then they ended up doing the software, and it sounds like it's going to be a big hullabaloo with my website and everything like that to get
Okay.
it certified to this. So that's why I'm trying to find out before I spend the dollars on this whether or not it's worth it going out and doing it with them.
I got it. Yeah, I can't answer the question, Bruce. I appreciate your comments there, though.
Thank you.
Okay. Susan, you're up. You're up, Susan.
Good afternoon. I just want to say to Teresa, I just was in Pittsburgh this weekend and I was pleasantly surprised with your city. I hadn't been there for over 30 years. So I too have kind of a question about the government pension and the impact to Social Security. I had come across the POMS section regarding determining if payments are a pension. And the one thing that kind of caught my eye and alarmed me was the where it says that a defined contribution plan, so a 403B or a 457 plan, if it contains employer, employee, or a combination of both contributions, that could be considered a pension. So I would have never thought with a 403B plan being paid out to ask the client about what were the sources, of contributions to that plan. So I just wondered if Jim could shed some light on something that's a defined contribution plan that is tied to the government pension, because it also says, supplemental plans could be considered pensions.
Yeah, what they're talking about, if you're working for someone and you don't pay into Social Security, it can go into a monthly pension plan, but it can go into something else too, like they call them unique payments, but like your 401B and those types of payments. It's still, you didn't pay Social Security tax on your wages, so they consider it a pension. It's money that certainly you have more control over. You control when you draw it out, how much you draw out, that type of thing. And they have formulas where they'll determine what a monthly benefit would be, but they do count those as a pension for WEP and GPO.
So if I have someone who was a professor, so I'm here in Ohio, so they would have state teachers employment retirement system, and they also contributed to a supplemental plan like a 403B plan with their, as a supplemental plan. You're saying both components would be counted as their income sources for the.
Yeah, the office will look at at both of those and then make a determination, but they could both be considered in the amount to try to come up with a dollar amount to see. It's not as important under WEP because if they've got both, they're probably going to suffer the full WEP reduction anyway, so it doesn't make any difference. The issue comes in if it's government pension offset. But yeah, they can include that, and they'll have to give the office all their information, and then they'll make that determination.
Okay, can I ask a second question?
Yep.
So when it comes to the COLA adjustments to those government pensions, does the recipient have to report those every year as to the new amount as to the COLA?
Well, they're supposed to, as part of the reporting instructions, because they will readjust. I don't know, is that a word, readjust? But they will adjust the offset based off of the new amount with the COLA included in that. Now, obviously not the Social Security COLAs, but their non-covered pension COLAs, they do need to report that.
And I understand that there's no statute of limitations, and when they go to calculate a repayment, right? So that if it's been years and years and years, and you've never reported your COLA adjustments, and all of a sudden somehow they become aware of it and they go to recalculate, they could go back as well, back to whenever everything began, if there's no 3 or 6 year statute of limitations.
Right. So it can be rather expensive. So it's a good idea to go ahead and report it, because I guess you could take the chance. Will I get by with it? Odds are no. So you might as well do it, and where it doesn't hurt you too bad.
Does Social Security get information from the return about what those pensions are?
I don't think they get info directly from the pension. I'm not sure where they get their information.
Okay. Thank you.
Eli's got a question or an answer.
Yeah, can you hear me? I'm sorry, I was having audio problems earlier, but yeah, Susan, I just wanted to add to what Jim was saying. So what happens a lot of times is the processing centers don't always pick up on the government pension offset if they haven't gotten the updated COLA from the person. They don't pull it, but eventually they're going to catch it. So sometimes it might be 5 years and they send you a letter saying, hey, we haven't gotten anything from you for a while. So it's just, it's incumbent upon the person, the client, that they submit those, because eventually it's going to catch up to them, but they don't pull directly from the pension groups. It's just something that sometimes their system doesn't catch it every year. So I just want to let you know that.
Okay, but you're saying that it would be that someone's going to get a letter when Social Security hasn't heard from them in a while as to asking for updates?
Eventually, yes. Eventually they will get a letter. Sometimes it's 2 years, sometimes it's 3 years, but eventually they're going to get a letter and go, hey, I didn't even know I was supposed to turn this in or something. And they will go back to that first year that they didn't get the increase.
Okay, thank you.
You're welcome.
Thanks, Susan. Thanks, Eli. Let's go to George. George, you're next. You're outside.
I'm outside listening in today, Mark. Thank you.
Okay. Thanks, George. Let's go to Eli. You're next, Eli.
Thank you, sir. I've just listened today. Didn't have any questions. Just missed a couple times, so I'm glad to be back.
Yeah, I noticed.
Yeah.
So
Thank you,
Eli,
guys.
since you don't work for SSA anymore, do you?
No, I stopped. It's been almost a year now.
Have you heard of, you're probably in contact with some of your colleagues, of course.
Yep.
Anything you'd like to share with us relating to what your colleagues may be saying?
Just similar to what I shared a few months ago, is that the kind of the replenishing of the Social Security employees that were lost during the pandemic, and then a second wave that was lost just as they started to come back to work. You just understand that your clients are still going to have long wait times. It's not getting better as fast as they'd hope. So you guys being trained in what you know is going to be extremely helpful to your people. There's a lot of folks that are on the call centers that don't have the proper training, and they're just really struggling with staff. So that, unfortunately, that's just the update. Been about 2 months ago when I talked to one of the technical experts there.
Thanks, Eli.
You're welcome.
The last report of the numbers, employee numbers, it's low 60,000 range, 60 to 61,000. That came from the Commissioner Martin O'Malley. Also, there was, something else I want to share with you too. You know, he in a letter, in a blog post or a letter or something recently, he mentioned that he's really happy to announce that the Social Security Administration cost is like less than 1% of the total benefits being paid out. And he looks at that as being a good thing. But kind of what that tells me is that they just are not, that they're not hiring enough people to give, you know, to give advice or to guide people or to answer questions quickly. So I look at it slightly different than Commissioner O'Malley. Jim, what are you thinking about that one?
Yeah, you know, they've always bragged about that.
Yeah.
They've kind of claimed that, but yeah, it would be nice to maybe spend a little bit more money and get some more people
Yeah.
on board.
Because, you know, in actuality, they can cut that amount in half. Instead of 1% of total benefits going out, they can drop down to 0.5% and really let the number of employees and assistants you get suffer even more. So, yeah, or nobody answers the phone, so they don't have any admin costs except to send out the checks. That is okay. All right, that's
Hey, Mark,
yes.
this is Pam. I just wanted to, and maybe Eli knows something about this or quit before, but there was something that just came out pretty recently that they were excited to be focusing on. I think there were 4 new areas that of people who have been overpaid.
Yeah.
That when it was even calculated by the
Mhm.
IRS or the IRS, the Social Security Administration that way, and we're going to be focusing on recouping that money, maybe in a more friendly way.
Yeah.
Have you noticed any of that coming to fruition or?
I think that's just it's what the commissioner wants to get done. Is it in
Okay.
play yet? Jim, is it in play?
Not that I know of. It takes a while to get all that set and going. They have to make some changes to their rules and get all that taken care of. So that's going to take a while probably for that to get done.
Okay, and my thought on that was, goodness, if they calculated it, it's not the person who received its fault, and, you know, I get that, but maybe like moving forward, make an adjustment, but seems a little cruel to go back and recapture something that was calculated by their own agents. But anyway, I wondered if they would also be looking for the underpayments that were maybe calculated too. If they were calculated over, there's got to be some who were maybe given less. So just kind of my thoughts on that.
If they find any that are underpaid, they'll pay them. Not sure they're looking for them in
Right.
particular. They have found instances where people have been underpaid. We had a giant initiative back in the 90s with SSI, and a lot of people received a lot of money, and it took many years to work through all of that. So if they find it, they will do it. But, you know,
They kind of won't be looking for it as much as the overpayment, maybe.
yeah, I'm more interested in what people owe me, not what I owe them. So, you know, that's what I would concentrate on. So that's probably what they would do too. But yeah, you know, if they certainly will if they run into it though.
Interesting. Okay.
You know, one of the areas that I always thought that they did a good job on was for widows and
Mhm.
paying them correctly and giving them the options, take your own and the survivors later, the survivors first and your own later. And then I read a report from their inspector general that said they weren't doing such a good job, and there was a lot of people that were underpaid through that. So hopefully they're still
Yeah.
working on that, but sometimes it's too late for some people.
That's great. And just a thought or suggestion I had, usually with every case, if a client needs to call into Social Security, I call in with them. And occasionally you get people who just regular service agents who don't know, but here in Glendale, Arizona, sometimes, and maybe because of a shortage, but sometimes an actual trained claims agent gets those service calls. I've experienced that. And I've got a gal who gave me her name, and I can specifically ask for her if I call in, even just for a service question, she said, see if I'm available. I might not always be, but I've gotten her a few times when I've called in, and it's been very helpful because she's extremely knowledgeable. So-
Congratulations on that, because that doesn't happen very
I
often.
know, I know. That's, yeah, I said, do you have wings? Cause she worked with me with a widow claim. And I said, you must have angel wings because you've just done such a great job, not only in her calculation and things that she did, but in her compassion and everything. So I thought that was great, but far and few between, but they are out there.
Yep.
Thank you. I'm still waiting for my underpayment letter, so I hope I get that today.
Right? Me too.
All right, thanks, Pam. Let's see,
I'll remind you then, Mark, I didn't get an underpayment letter, but I did get my Social Security benefit payment today, so.
oh, yeah, you get paid on the third Monday. Okay. I have to wait till Wednesday morning for mine. Thanks, Jim. Let's go to Jade. Hi, Jade.
Good afternoon, everyone. It's so amazing to be back. I have a couple things that I just wanted to touch on. First, Dan kind of reminded me of this, but when it comes to Social Security presentation, do you guys have anything that you provide that we can utilize, or are we on our own with that?
Well, we do have one, but please remember our focus is educating advisors. So we're not really good with public stuff.
Right, and that's what this would be. This is kind of a
I-
team education. It's not for the public.
Oh,
Yeah.
okay. Well, you can always use any of the slides in our PowerPoint too.
Oh,
But,
perfect, perfect.
Yeah. So if you're looking for a public one, just send me an email and I'll send you what we have. It's probably, it's something that advisors need to make adjustments when necessary.
Sure, sure. Yeah, this is just strictly for the team, so that works out really well. So
Okay.
easy answer for that one. The second question is kind of a twofold, maybe even three. So I have a friend of mine that I've been working with. Recently, her mother died. 6 months later, her brother died, and those were the only families that she had remaining. And she is on SSI for quite a long time. We just recently found out that she's one credit short of getting the SSDI payment. So we're trying to get her to go back to work to earn that. So two questions within that is, one, what is the process that we can expect for that transition? And two, somebody had told us that we no longer have to do the whole, work a quarter to earn the credit. Is that a real thing?
Well, it's all based on money, so you earn the credit. It's based on the amount of money, and I don't remember. Do you remember what a credit is, Mark?
1174.
Oh,
Isn't that what you
okay.
have to? Yeah.
Not 1174.
That was 17
No.
something.
That's the first.
It's like
pencil.
1730 or something like
Oh,
that.
yeah. You're right.
Yeah.
Okay.
Okay,
As you
so-
talk to him, I'll look it up.
All right. So, I mean, they could go ahead and earn the credit. The thing with disability is that there is a current work
Yeah.
connection. So it depends on when they last worked too. That last credit may make them eligible for retirement, but it may not make them eligible for disability. So they would
Okay.
need to find out, it's called date last insured. That's the date they can look and see, okay, you've got enough work credits in this compressed period of time. Normally that's within a 10-year period, that you would be eligible for Social Security disability. Let's say that she does meet that requirement. Then what they would do is would pay her Social Security disability. She would file it in the office. They'd convert her from SSI to Social Security disability, depending on the amount. She's, as we talked about before, she may end up getting both. If her Social Security is 500, she'll get 500 from Social Security and then 500 or 600 more for SSI to get the top amount from that. There is a $20 disregard, so she'd end up with $20 more a month. She would also eventually become eligible for Medicare. Now, the good thing with that, if you're on SSI, if you have Medicaid and now you become eligible for Medicare, generally the states will pay the Medicare premium for them because it's cheaper for them. Medicare is primary, and so they get people to go on the Medicare. But it's a fairly smooth process. They've already gone through the disability determination. And the disability requirement's the same for SSI as it is for SSDI. But you might want to just do a calculation go on the Social Security website and do a calculation and see what our benefit would be. Is it worth going through all that to maybe get $20 a month? It may not make a difference. The other part is the nice thing about SSDI versus SSI is the income and resource requirement. There is none with SSDI. Doesn't matter how much you have, you're still eligible for the SSDI, whereas SSI is a needs-based program.
Yeah, and that's where the dilemma lies, because her family pretty much financially supported her for the last almost 15 years, because she had a brain injury that occurred. Now they're both gone, and unfortunately the brother did not leave an inheritance other than his house and property, which she now has to pay for, because he had just taken out a mortgage. It was a free and clear house, but a friend of him convinced him to take out a mortgage to buy a bunch of boy toys. And now she has this mortgage that has to be paid. And so that's kind of where we were trying to get her to go from SSI to SSDI to at least get additional income and allow her the opportunity to make more on a side hustle to help her pay that expense, because we're running out of money that we were able to help her with. So that's kind of where I was on that. So you answered the Medicare question. That was one. I guess what you say is date last insured, which it's been years. I wouldn't doubt if it's been over 10 years since she's worked.
So she may not be eligible for the SSDI anyway.
Yeah,
How
and
old
she's
is she?
only 56, so she's not even going to be eligible for Social Security until 62.
Okay, but it still might be worth getting that extra credit so that when she is 62, she can make some, or maybe enough. She had enough work in the past where her income would end up being higher.
Okay.
When the retirement kicks in.
Okay, well, she was working with somebody from VARS here in Texas. It's a rehabilitation program through the Texas Workforce Commission, but I'm not quite sure how educated that person is on Social Security. So it's probably in our best interest to go talk to the Social Security versus someone at the rehab facility.
Yeah,
I
and
suspect.
one of the things is see how much money you're talking about. Just you can go on the website and you could go to the section where you just add in her earnings, and then
Okay.
add maybe, this year add in enough for a credit or however many she's going to need, and then see what it tells her the amount. It'll also tell her if she's eligible for disability.
Okay, perfect. All right, that's what I had. I really appreciate that. Thank you, Jim.
Sure.
Thanks, Jade. Pam, you're next, Pam. Pamela.
Pamela, hello.
Hi.
Well, all I can say is I'm thankful to be here. I just had Irma advising my financial planner, and I'm probably going to stop my Social Security, which is supposed to land in my account on Wednesday.
Good.
But the whole picture looks a whole lot different with all the knowledge that I have got. So it's exciting, wonderful. I love that I started here with you guys and have learned a lot, and I got a lot more to learn. So anyway, I'm here to listen and be here.
Okay. Thanks, Pamela. I appreciate it.
Thank you.
Okay, John, you're next, John. There you go.
Hey, Mark, thank you. So first thing is, I'm almost this first time here, mostly listening, but I did have a question that's coming up with clients. In my practice, just as a matter of practice, when we're talking to clients about, especially if there's still a good ways to retirement, to keep in mind inflation, longevity, things like that. We're having the conversation about the shortfall in terms of when Social Security is supposed to be running out of funds. I think 2035, correct me if I'm wrong, is the projected date at the moment. So we're talking about that 20% shortfall potentially. Just to get clarity on it, because I'm myself not sure on it though, if you guys can answer the question as far as, will folks that are already receiving retirement benefits, for example, also experience that shortfall, or is it just people coming into, so in other words, will the reduction happen as you're coming into it, what you would have expected to receive the 20%, as opposed to folks that are already also receiving Social Security that will experience that shortfall, so we can have a different conversation of folks in terms of what they should anticipate.
Okay, so if Congress does not make any changes at all, then the trust fund would be gone in 2035. At which time, everybody, including myself, will see a 17% reduction in their benefits.
Oh, wow.
Yeah. But Jim and I both believe that by the time that comes around, Congress will make changes to the Social Security program, which will delay the insolvency of the Social Security Trust Fund. And in that situation, the younger folks will take the brunt of changes, not somebody currently receiving benefits, even though that still could be the case. So if nothing is done, then everybody will see a haircut. And if changes are made, like extending full retirement age to age 70, then younger folks will take a cut in their future benefits. Jim?
So before that,
Oh.
before going to Jim, so based on what you're saying in terms of your feeling, yours and Jim's, do you see then the folks that are still not retired, as far as something happening, maybe FRA being pushed further down? Is that what kind of where the
Only for
money's gonna
younger,
come from?
only for younger people, 30, 40, 50, 30 and 40, probably not 50.
Okay.
Yeah. Jim, thoughts?
Yeah, you said it pretty well. That's probably what's going to happen. The changes probably won't come to the last minute, but they will come. They all want to get reelected. I know I'm not going to vote for somebody that gives me a 20% pay cut. So, and there's a lot of other people that won't either. So they're going to have to definitely make some changes, and they will eventually. The problem is they just, like they do everything else, they wait till the last minute.
Okay. Thank you,
I'm
John.
thinking they
Thank
might
you.
even raise the taxable limit from 85% at the max right now to 100% of it taxable. I don't know that does anything for Social Security by itself, but it's going to put more tax revenue in. So I'm kind of looking for that too.
Yeah. Well, we haven't heard that.
No, I haven't heard it, but
No, you haven't heard that. We've heard
right.
maybe they can even increase the threshold so less people pay tax, but we haven't heard that what you were saying, Pam.
Right.
So
But I'm
that
just thinking as we
they'll
go
increase it to
further into deficit,
100%.
where are they going to
Yeah.
get more taxes?
Well, they could do that,
Yeah.
but yeah. I think they'll probably play around with the amount of earnings subject to FICA taxes. I think that's
Sure.
how they'll raise the taxes. That's my
Yeah.
feeling.
Very good.
Okay, let's go to Leslie. Hello, Leslie.
Hi, I had a question about teachers' retirement. I have a client who worked as a teacher for about 10 years. She's now an attorney, so her income as an attorney was obviously a lot more than it was as a high school teacher. But does WEP always apply to a teacher's retirement?
Yeah, if the retirement is, when she worked as a teacher, if it was one of those where you didn't pay Social Security tax, it will affect her. But the more years of substantial earnings that she has, that'll lessen that impact. So if she has 20 years or less of substantial Social Security covered earnings, she'll see the full offset. That would be 40% of Ben 0.1. If she has 30 years or more, then there is no offset because she's back to 90% on the first Ben point. And if you're in between, it works itself up 5% for each year of substantial earnings she has. So it just depends on how old she is, how much time she's got left in the workforce, and how many years of substantial earnings she ends up with.
Okay. All right. Thanks.
Yeah, you might have her to go online, or you could do it for her and pull up the WEP windfall elimination provision fact sheet, and it'll show you what the year of substantial earnings would be this year. I think it's $32,000 or $33,275 is a year of substantial earnings this year. But she could look and see how many she has and how many she would need to reduce the amount of the offset.
Okay. All right, thanks. I might send you an email with the specifics on that.
Okay, that's fine.
Okay, thanks.
Okay, go to Caroline. Hi, Caroline, your iPhone.
Hi, I have a question in reference to Irma. This individual is concerned about a severance package that they're going to get, and they wanted to know if that would be included in the adjusted gross income to determine the bracket that they'll fall in.
Well, it includes all your income. I don't have the actual definition of IRMA income, but it's basically AGI plus other stuff. Other stuff.
Okay.
So yeah, I would say it's going to be included. Jim, what are your thoughts?
Yeah, I mean, you still pay the Social Security tax on it, other taxes. I see that as included in the IRMA.
Okay, thank you.
Okay, Caroline. Luke, you're next.
Hi, Mark. No specific questions for me, but did have a personal one. I think I sent you an email a little bit ago about my advisor certificate.
Did I respond?
No, not yet. So I was just wanted to follow up on that. I seem to have misplaced it and I cannot find it
Okay.
anywhere. Is there like an electronic copy of it that I could get?
I'll see what I can pull up for you, Luke. This is Jim Blair's delay. I'm sorry, Jim.
Yeah, sure.
Luke, I'll look into it. I made a note.
Yeah, no worries, no worries.
Okay.
Thanks.
Thanks, Luke. No, certificates are my issue, not Jim's. George, you raised your hand.
Yes, thanks, Mark. Yeah, I just wanted to double check as far as the earnings test, somebody applying for their benefits at 62 and they're still working. As long as they don't go over that limit, then Social Security should not reduce that check that they're getting. Is that correct?
Yeah, if they're not over the 22,000, then there would be no reduction for wage. Or if they're over the 22,000, but they stay under the monthly test, then they'll get all of their benefits.
They should get and I have a client that probably be getting it at 62. She would get a reduced amount, of course, because she's not waiting till her full retirement age, but that should be the amount of reduction. And then she should get her spousal boost automatically once she applies.
If her spouse is already receiving, so she's eligible for it at the same time, yeah, it'll all be part of the same process.
Okay, so we'll just keep an eye on that earnings test limit.
Yeah, and what'll happen, so she doesn't get too concerned, they'll process her retirement application first, and she'll get her letter in the mail that says this is how much you're going to receive. It won't include the spousal in it because they haven't processed it yet. So they process one, then the other. So it takes a little while for them to get caught up and everything, but eventually it'll get done.
Okay, so she should get a second letter down the line.
Yes.
That will include the boost.
Yes.
Got
Hey,
it.
so
All right.
that monthly test is the 22,000 divided by 12? Is that roughly what the monthly test would come to?
That's exactly it. It's 22,320 divided by 12, which is 1170 or 1180.
No, it's 1,800 something.
18 something,
Oh,
yeah. So that means a
18
person can earns less than that, even though, but so how could they earn less than that and still earn less than the 22,000 though?
Well, no, if you go over the 22,000, say you work half a year and start your benefits in July,
Yeah,
you have a half a year of earnings, it's over 22,000. So if in each month when you start your benefits, if you're under the 18, whatever it is, I should have got my cheat sheet out, but if you're under the monthly amount, then they'll pay you anyway, even though you exceeded the yearly amount. Any month that you're under, they'll pay you anyway. 1860.
Yeah.
1860.
Yeah, and that's just 22,320 divided by 12.
Jim, gift card time. Make sure we get this done. Pick two numbers between 1 and 22.
Let's go with 6 and 11.
Okay, I'm going to go from backwards, the end this time. So Mark, you win a $50 gift card, but you need to send me an email, Mark, as a
Okay.
reminder. So send me an email and I'll get you a gift card.
Thank you. Thank you both.
George, you also win a gift card. And so send me an email and I'll get the gift card going. Don't send me an email. I won't remember. I'm younger than Jim, but still my memory's not that strong. Okay. So send me emails, mkiner, Kiner at mypremierplan.com. Okay. Elena, you're next.
Hey guys, I'm actually just listening in. The question that I had has actually been answered right in the beginning.
What was the topic?
It was regarding WEP, GPO, and filings. So,
Because I know
but
you're in
we're good to
you're in
go.
Columbus, right?
Yes, sir.
Yeah, so it's a weapon GPO is a big issue for you, I'm sure.
Heck yes.
Yes. Okay. Ethan,
But
you're next.
thank you.
You're welcome. Ethan, you're next.
Just listening today, thanks.
Okay. Jamie, you just joined us. Jamie, what's on your mind?
Yeah, same thing. Just listening. I was here earlier and had to drop for a client and came back, but
Okay.
appreciate all the good info. But yeah, just listening today.
Okay, thanks. Lynn, you raised your hand. I'm listening.
We had somebody who asked about IRMA and the employer settlement, and if it was going to be counted for IRMA calculation. I happen to have printed off the IRMA booklet, and it says here that you can request an appeal due to life-changing events for the IRMA. One of those is work reduction and or work stoppage. To qualify, you've got the employer settlement payment has to be a result of either the employer or former employer's closure, bankruptcy, and reorganization. So if the person retired because they reorganized the company, it could qualify under the work stoppage and therefore be forgiven.
Yeah, that's the life-changing event aspect. You'll complete the form SS44. Thank you, Len. I've never completed that form before myself, and I never will. When I read the instructions to that form, it just confuses the dickens out of me. All right, folks, it's pretty darn close to 3 o'clock Eastern time. Anything else on your mind before we adjourn for the day?
Hey, Mark, says I hate to keep hopping in, but real quick, my business partner is tenacious with the subject we just talked about the appeals. We have gotten 3 or 4 situations, appeals granted for people on that situation where even when we called in and asked them about it, they said, no,
Pam, you froze up. So what Pam is saying is it's always worthwhile appealing if you think you fit that situation, no matter what somebody at SSA may say. And I do agree with you 1000%, Len. I mean, not Len, Pam and Lynn and everybody else. All right, folks, that ends today's, Pam, so we heard what you said.
oh, that's all
And
right.
it's always a good thing to go ahead and fill out the form
I'm
and
with
let,
you.
and
It's
let them
crazy,
make
but-
an official decision on that.
Right, yeah.
All right, folks, thanks for being with us. We'll see you next time. Bye, everybody.
Bye.
Bye.